Hi, you're watching ET Now, and we're coming to you live from the SBI Live studios. You're with closing trades, and the closing trades are not looking all that great considering we started off with much cheer all across our global peers. So kick-started in the green, nicely built on to that 25,500 mark, got close to that, and then from there you've seen a 0.5% decline on the index, and that's pretty much rubbed off on the Nifty bank as well. We'll come to the banking pack in just a bit, but the Nifty has had its touch and go moments with that red mark as well, and then from there a little bit of a resurfacing, but other than that you're not really seeing a material move. We're struggling around the 25,350 level currently in trade. What's putting pressure? It's Tata Motors, Trent, Bajaj Finance, Coal India is a weak link today, Tata Consumer is down, Titan, M&M. The entire consumption end is the one which is definitely weighing heavy on the indexes today. Other than that, that PSU banking rally that we were talking about for the last two trading sessions, that seems to be also giving up. So SBI, there's other than that, IndusInd Bank, ICICI Bank from the private players as well. They too are not really participating today. Having said that, the tilt of the market today is actually quite defensive. So IT, of course, was a strong contender from the word go. Other than that, Pharma also has joined the pack of winners. You've got an Infosys, Sun Pharma, Cipla, Wipro. They are the ones which are holding out in trade. HDFC Bank, though, seems like a standout performer from within the private banking pack. That is still holding on to the greens, about a 0.5% uptick, although that too has come off from the top of the day. And then some of the insurance plays, HDFC Life, SBI Life, they also seem to be still holding on to their gains. So Pharma, one can say, is the only standout sectoral outperformer. The breadth of the market largely even Steven. It's the advances which are taking over only by a slim margin, while HFCL is holding up a solid 4.25% in trade. There's LIC Housing, there's Glenmark, Sammaan Capital. These are some names which also continue to look good. But Snehi, what about the newsmakers?
Well, absolutely, Aisha. Lots of stocks are in focus today. Dixon, on the back of that acquisition, we've been talking about that 51% stake that they are going to be acquiring. So that stock in news. Other than that, if you take a look at some stocks that have been buzzing all through the course of the day, it's Poonawalla Fincorp. The promoter has increased stake in this stock. They've allotted 3.31 crore shares to Rising Sun Holdings at an issue price of 452 rupees per share. Total deal consideration at 1,500 crores. So that stock is soaring in today's trading session. A 13% very healthy uptick is what we're seeing for Poonawalla Fincorp in today's trade. Other than that, Cohance Life Sciences has been the buzzer even before market opened, because in the pre-open we did see a block deal taking place. 8.9% equity has changed hands in a large trade. It is estimated that it is the promoter that has sold this stake, in post-market hours later in the evening we'll have more clarity on the buyers and the sellers. So that stock will come up for you. That's Cohance Life Sciences that we're talking about. And Natco Pharma too. US FDA has classified Hyderabad-based facility as voluntary action indicated, VAI. So that's Natco Pharma. So two stocks, in fact, from the pharma pack in focus. Natco also holding up pretty well for itself, up 3.3%. Other than that, you have Greaves Cotton. They've launched a new two-wheeler, a scooter. So that is also going to be important to watch out for, along with some additional news flow coming in from the company. So you have Greaves Cotton that's also holding up about 1.3% higher. But if you take a look at from the broader end of the market, what is doing well, it's actually Zen Technologies also doing well, as is the case with LIC Housing Finance. Biocon also one of the top performing stocks today. We've had news flow on that one as well. So it's in fact the entire pharma and diagnostics pack that is doing very well right now. It has overtaken the uptick that we saw in Nifty IT in the first half of the trading day. So Natco, Glenmark, Biocon, Loris, Aurobindo, Sun Pharma, all trading with gains of anywhere between 1.5% and 3.5%. So that is what the market texture is looking like right now, Shrishti.
All right, that's about the markets, but they have given up those morning gains. But let's take this discussion forward with Kunal Bothra as well. Kunal, good afternoon. The markets has taken complete U-turn. What do you make of the markets right now?
No, I think this is side turn for the markets. Just a pause in the parking lot right now.
Intraday U-turn?
But it's good that there's some semblance of stability, that after this news flow, the event being out, the markets are just trying to digest the gains. Profit booking is happening, of course, which is very, very evident with the kind of stocks which are seeing some sort of a correction. So and then you've seen the defensives, or not the defensives as such, but the underperforming sectors like the pharma, etc. They are trying to make a comeback, from the sectoral front. So I think that itself is an indication that the market is still holding on to those trend on the upside. We've still not broken below yesterday's swing low for the index. That I believe could be the pattern to look out for. So till the time we just hold on to that, say yesterday's or today's low for the index, and even if you consolidate for the next couple of days, I would still believe that the bias should be positive. The put call ratio for the for the bank Nifty bank index, that is still trading above that 1 mark. So I think it's 1.05, 1.06. The last I had seen for the PCR ratio, that indicates that the tilt could be slightly in favor for the banking index over the near term. So I would probably believe, even for the PSU banking lot, that this dip of 0.5%, 1% for individual banking names should be bought into.
Okay, on that note, let's take a very quick break. We'll continue our stock chat with Kunal on the other side.
This from SBI Live Studios, and let's talk stock-specific action then. And Maruti Suzuki is the counter that is in focus, as today the company has announced the price reduction across their models on the back of the GST revision. Let me take it across to Nivedana Prabhu for more details on this one. Nivedana.
Right, Shrishti. In fact, if anyone's looking to buy a car at this moment, it's the perfect time. In fact, if you look at that commentary that's coming from the management, it was affordability that they wanted to look at after the GST rate rationalization. But let's talk about what that's looking like for the small car space as well. Let's begin with those numbers, because we're looking at Espresso. It's at 3,49,900. Alto K10 is also looking at a reduction of up to 1,07,600, which now means that the Alto is also going to be very affordable. Celerio as well. Wagoner, of course, which is one of their products that is the most selling one. And Ignis as well, when you're looking at it now with that GST rate rationalization at 5,35,100. Premium hatchbacks as well. If you're talking about Swift, you're looking at a massive reduction there, 84,000. Baleno looking at 86,100. The rationale is very clear here, hoping for consumers, of course, to get that opportunity to have affordability. And that's exactly what the management also said. They're also hoping for the two-wheeler, consumers to shift now to the four-wheeler segment with these kind of reductions that we're looking at. In fact, if you look at the compact SUVs as well, Francs there looking at a large discount, which will now stand at 6,84,900. The Brezza as well looking at 8 lakh, beg your pardon, and 25,900. We're talking about multi-purpose vehicles as well. Ertiga now, there's a discount of 46,400. So 8 lakh and 80,000 is what we're looking at. If you're looking at the Ecos also, it's about 68,000 reduction, which means it stands about now 5,18,000. And commercial vehicles, super carry as well, there's a discount of up to 52,100, which means essentially it's going to be costing about 5,06,100. So those are, of course, the essential prices that Maruti is looking at with that. In fact, the management, of course, did state that for the auto sector, it's a welcome move in terms of how you're looking at the GST rate rationalization. But they were hoping with this particular move, it's going to be looking at a boost in terms of the small car segment. And with these kind of numbers that we're looking at, it's perhaps Diwali before Diwali, Shrishti.
Indeed, and everybody was waiting out for Maruti Suzuki, the leader in the small car space, to announce those. But thank you so much, Nivedana, for telling us that across the model, what sort of a price cut is what we have seen. And yes, Maruti Suzuki is going to be the biggest beneficiary, since they drive almost 70% of their sales from the small car segment. But let me also understand that what could be in store for the auto space, and how is the other sector picture looking like. And let me welcome Dhananjay Sinha, CEO, co-head of equities at Systematic Groups, joining us, as well as Arpit Beriwal is also on the show right now. Very good afternoon, gentlemen. And Dhananjay, let me have your take first. The price cuts being awaited by Maruti Suzuki, they are also through, and from 22nd of September we will see the implementation happening. But what's your current take on auto space, and where are you finding value right now? Because it's going to be more like a structural story for the auto space, but given the run up, are you still finding the valuations comforting?
So I think you're right. I think a lot of it is being priced in. I think following the announcement on 15th August and the development thereafter, I think there has been a considerable rally as far as the auto sector is concerned. My sense is that if you look at the overall GST rationalization thing, our view is that the auto sector is most prone to an upside in terms of volume. I would say companies such as Maruti and all, which have been significantly in the value segment, may see a comeback, because over the last, I would say, 12 years or so, the small car segment has actually seen a contraction, and largely the focus has been on the premium SUV and stuff. So my sense is that the mix for Maruti is considerably in favor of the smaller cars and entry-level cars. So I think the reduction in the prices that we are seeing was broadly sort of anticipated. But I would say that from a longer term standpoint, the ownership as far as Maruti is concerned is still underweight as far as market participants are concerned. So my sense is that that might continue going forward. I would say even I would say Hyundai, which is recently listed, also has a reasonable space to perform. So I think that is something that we're looking at. Of course, we are more positive on the two-wheeler space because I think the volume growth might actually surprise on the positive side in a more significant manner, because we think that the price elasticity or sensitivity in the two-wheeler space is higher than for passenger vehicles. So if I have to really stack it up, between SUVs to entry-level cars and two-wheelers we might actually see significant response. So I think, the two-wheeler space, be it TVS or I would say even Hero Motors, might actually do better. And I think we are seeing a good amount of traction as far as two-wheelers EVs are concerned. So be it Ola or Ether, I think these are companies that are showing good traction and good investor interest as well. Conversely, I would say the response on the FMCG side of the GST cut and all has been fairly muted, and we have seen a major company basically telling or guiding for a sort of modest growth in volume even in the second quarter. So I think we have to really differentiate between the consumer segment components while considering the positive impact of GST reduction.
Okay, interesting take.
Technical experts. But let's also get into conversation about Dhananjay and resume our conversation rather with him about the entire pharma space, because Dhananjay, the kind of run-up that pharma has seen just today, and even on a week-to-date basis, it's been weak. But if you see the kind of run-up we've seen today, and it has surpassed the gains that IT was posing in the first half of the trading day. Multiple news flow coming in on Cohance, Zydus, you have Biocon in focus. What's your take on the pharma space, and which sub-theme over here would you prefer right now?
So I think, generally I would say healthcare sector is something that we've been positive on, especially with respect to diagnostic and hospitals, something that has been doing very well structurally from a domestic standpoint. That segment appears to be doing very well. And we think that it can continue doing well in terms of business and re-rating, etc. As far as the pharma sector is concerned, it has been bogged down with this whole tariff thing, especially given the investigation and other things that are happening, and this was kind of dangling. It has been spared as of now as far as the tariff imposition is concerned. So I think this whole conversation that is happening between, or resumption of negotiation that is happening between India and China, with India and US, with respect to resolution of the conflict, I think if that sort of is resolved to a reasonable extent, I would say that that pressure on Indian stocks, especially pharma segment, might actually start to wane. I think that's what the market might be looking at, quite apart from the fact that it has been sort of a switch, kind of a rotation between sectors, and the pharma sector seem to be gaining flavor at this juncture. So I think it's part of the sector rotation thing that is there. But I would say from a healthcare standpoint, we are more positive on the hospitals and diagnostic plays.
Great to have you on the show, and thanks for your thoughts as always. Arpit, if I could get you in on the discussion as well, and let's talk about banks, because the kind of divergence that you've been seeing in banks, last 2 days it was all about PSBs. Today there's profit taking on some of those names, IndusInd, SBI, etc. And it's actually HDFC Bank which is the only one which is able to hold out.
So looking at the overall the banking index, so far we have seen the least underperformance from the banking index in the last couple of weeks. So from last 2 to 3 days, we have definitely seen good selective action in the banking space. Now looking at the chart structure of particularly HDFC Bank, So far, HDFC and ICICI, which were the primary drivers for the Bank Nifty index, so far they have been subdued. But looking at the overall banking index, 55,555 was a key level that was Bank Nifty was not able to surpass. But today also we have seen a dip from high levels, but holding 55,500 zone. And here on, I think it would be ICICI and HDFC that could join the party from here on for Bank Nifty to move higher. So HDFC definitely the risk reward is quite favorable, consolidating from last 13-14 sessions, closing above 975 can head towards 988, 1000 levels. Along with that, second outperform would be Kotak Bank. So if you look at the chart sector of Kotak Bank, a very strong base formation has been seen on the weekly scale, almost a range breakout on the weekly scale after 7 weeks above 2040 levels. And I think from here on, slowly steadily, you can see a good move towards 2100, 2120 levels. So Kotak and HDFC looks good from here on to play the next upside swing in the Bank Nifty.
Heavyweights, Kotak and HDFC Bank is what Arpit is liking at this point in time. But a lot of volatility is kicking in because Nifty 50 is back above that 25,400 mark right now, and even Nifty Bank has seen a very good recovery. But along with that, let's also get you some tradable ideas as well. And Kunal, you go first. Tell us which are the stocks that you're tracking.
So I'll bet on large cap names, and Sun Pharma is something which after today's up move, I think it started to look attractive, especially with the fact that the stock is given a breakout, a swing breakout on the short-term charts. 1690 is where I would place the target for the stock over the near term, which is the buy, with the stop loss could be kept at 1620. ABB is the other stock which is looking extremely attractive. Now the stock is still below its long-term moving average, the 200 DMA, but the setup in the last 3 or 4 days, the consistent price action, the peer group which have started to show signs of a breakout, I believe it would be a matter of time that even ABB would start to pick up as well as get back into a breakout mode. So would look out for 5,800 as a target on the upside, stop us at 5,200.
Okay, so those are two stocks that are looking good to Kunal right now. Arpit, what about you? Any BTSC recommendations you'd like to make for our viewers? Okay, we seem to have snapped that line, so we'll try and patch him back. But Kunal, your two picks, ABB and the other one that you were talking about, Sun Pharma. We've spoken about Sun Pharma and the entire pharma space at length. But what about ABB that's looking good from you, good to you from this space? Any other stock in the industry that ABB belongs to looking good?
So Siemens is the other stock which is looking attractive. L&T we've been discussing over the last, I think, 2-3 days, especially a point when I think L&T was one of the top performers on the Nifty 50 basket, I think 2 or 3 days back. That stock is again looking quite charged up. So, when you look at the entire peer group, which have given breakouts over the last, I think, 3-4 odd trading sessions, and then this is the only stock, which is still in an underperforming category. So I believe that the trade is pretty much on the higher side, where we may look at a revival of sorts for this kind of an underperforming name. I also believe that stocks like L&T, which has given a breakout over the last 2-3 days back, I think that stock, even at current levels, would start to look a lot more better in terms of the price move, because we've managed to come back into a breakout mode after, I think, weeks or months of consolidation for a stock like L&T. So this may not be a short-lived move. Yes, you may have a couple of days of price uptake and then a few days of consolidation for these stock prices, but then net, the trend for these stocks is pretty much on the positive side.
All right, so that's the take coming in on some of these large cap names. But with this, let me also welcome Sunny Agrawal on the show right now. Hi, Sunny. Good afternoon. And Sunny, a lot of sector churning that is underway. Today, we are seeing the pharma pack that is holding up well. Add to that is IT. Help us understand which sector are you betting on or which is looking good to you?
Yeah, good afternoon and thanks for having me on the show. I think again, we continue to remain bullish on festive-led beneficiaries. So again, as discussed earlier, so again, hotel and tourism is the one pack where we have a bullish view, and a few names which we are recommending right now to our clients are Indian Hotel and Lemon Tree. In addition to that, again, auto pack, although auto OEM, we have seen a massive rally post 15th of August. We believe auto ancillary still there is a lot of value. So auto ancillary, which are leaders in their respective segment, a case in point, Subros, which hold close to 40-45% market share on air conditioning, passenger vehicle or commercial vehicle, both the segment. So few select auto ants names like Subros, or for that matter, SJS Enterprises, Lumax Auto, Precol, Sandar. So again, I think auto ants is the place to be in. That is our take for next a few weeks. In addition to that, consumer durable, which can be played through EMS, which are focusing on consumer durable as a pack. So again, there comes the name like Amber, EPAC durable, and PG Electroplast. So again, I think entire focus is right now on consumption-driven sector and allied ancillary sector, which are catering to the brand owners in the consumption space.
Makes sense. Arpit, let's have your stock ideas as well.
Yeah, so looking at the overall, the setup wise, if you're seeing very good momentum is seen in the new age space, and first would be Eternal. So a very strong setup on the monthly and the weekly setup, a fresh range breakout on the daily scale above 334 levels, strong bullish candles. So definitely looks good towards 350, 355 levels. One can go long with keeping stop loss of 320 for an upside move towards 355. Second would be from the capital market theme space, CAPS, Computer Age Management Services. A very good reversal on the weekly setup, a range breakout after almost 7 weeks, strong bullish candle on the daily and the weekly setup. So risk reward looks quite favorable with keeping stop loss of 39.50. Slowly steady, the stock can head towards 41.50, 42.50 in the coming couple of days with a week's time frame.
All right, so those are the calls coming in from Arpit. Let's watch out for that. But moving on, technology solutions provider Sheshasai Technologies plans an 813 crore rupees IPO, which is set to open for subscription on September 23rd. We caught up with the management, who is the chairman and managing director, Mr. Prangat Lalwani, to understand more that what is the outlook going ahead, and to understand the company more in a sense what the funds will be utilized for. Let's go across and listen into a slice of that conversation.
Our revenue in FY23 was close to about 1150 crores, and from there in FY24 we reached a revenue of 1550 crores. Now also, if you see in the book, we have disclosed that in that financial year we had some of our customers having a bulk one-time projects that came into us of the value of about 150 crores. So if you correct that factor into it, then FY24 to FY25 we've grown at about 5 to 6%. Obviously we had planned for much better, but we had one or two of our customers who had some embargo in terms of their account opening, and we had some changes in the policy with regard to co-branded credit cards. Also, some of our contracts which were to start in Q1 of the calendar year got slightly delayed. So that's why the growth rate was slightly lower, but we are well poised to continue our growth journey in the years to come.
How dependent is your business to the credit cards issuances? Because we've seen in the last 1 or 2 years that there has been a slowdown in that segment. In fact, regulatory interventions have also led to cooling down of that segment as well. So are you looking at a modest growth coming in there, given that there is a regulatory supervision now coming into credit card issuances and the kind of lending that is happening through credit cards, so that makes it a little slower in growth for you?
See, essentially, if you look at our card business, right, we have multiple product streams within the card business, right? So our major driver of our card business obviously is the debit card business. Then we have the credit cards and the prepaid cards. And within the debit card also, what you see as the growth driver, obviously, we have the financial inclusion programs, the direct benefit transfer schemes of the government. We've got recarding of the cards that needs to be done. We also have travel cards which are coming in with the kind of metros that are proliferating across the country. And we also see here that the credit card has two bases to it. One is obviously the current base where there's a recarding happening, and obviously there's another base where the new cards come in. So in a sense, if there is a regulatory change that happens with regard to credit cards, right, of our total card base at Sheshasai, the credit card business is close to 8 to 9%. Right, so it really doesn't impact us too much, but we would love that going forward as the market expands, the credit card growth really picks up. So for us, the growth comes in from the debit card segment, and we also focus a lot on fintech partnerships, where we have a lot of prepaid cards that go out. We see a lot of forex cards going in with citizens traveling abroad, etc. So all in all, for us, the debit credit card segment does not really dominate our issuances as such.
Is it also possible for you to give us an indication of how the margins move between various segments for you, from cards to solutions and the communications that you look at?
Yeah. So essentially, how it works is that typically we have the three verticals, as I said: the payment solution, the communication solution, and IT solutions. Across these three solutions, we have a lot of shared resources in terms of our tech platform, our infrastructure, some of our key resources, the IT backbone of the organization. So we have a blended EBITDA which comes in okay, but on overall level, we could say that the payment solutions vertical and the IoT solutions vertical, their margin would be a tad higher than the communication solutions vertical. But we don't have a policy of monitoring vertical-wise EBITDA.
But 24.6% blended margins, is there any scope for pushing it up here, or is this a nominal level of margin that you see for your business?
I think considering the future business visibility, we feel that we will be good enough to be able to maintain this EBITDA level as we go along. Yeah.
Give me also a sense of
level, yes.
the emerging verticals within the financial services space. Now you're looking at banking and insurance as well. There are other verticals that are coming in, whether it's from capital market side or from wealth management. Are these some of the opportunities that you're looking at as well?
So essentially for us, as more and more affluence comes in, okay, so we at CCI were the first card manufacturer in India to have our metal card certified by the global payment schemes. And globally, if you see, there are only a handful of card manufacturers who got their product and facilities certified to be producing metal cards. So as we see more and more affluence coming in, more and more customers going up the wealth value chain, what we are finding with our customers is that the entire customer experience in terms of the unboxing experience, the welcome kit, the quality of the deliverables that go to them have to be of definitely higher level of sophistication. So that's where we feel that in this wealth space, etc., the metal card delivery and the metal card product would play a very big role in in addressing that segment.
And where do you see the maximum challenge or biggest headwind that you see for your sector?
I think the only headwind that probably one would see is the regulatory headwind, right? But other than that, from a execution perspective, if you see at CCI, we have customer relationships for more than 2 decades across all our customers, right? Very deep entrenched relationships. We have infrastructure at 7 locations across the country, all certified. A very good track record relationship with the customers. So, from a opportunity perspective, we are very, very well positioned. But it's just that regulatory changes is something which is beyond all of us. So that's the only one thing which we keep our eyes on. That gives us an indication of where the
markets are trying to pick up a little bit. It's been a little bit of those choppy days. We've consolidated quite nicely. For the last 2 days, we've been making good headway. Today as well, we started off quite okay. From there, petered down a little bit, and again, now we're pulling up about almost 100 points up in the green. It's really Pharma all the way, although within the large caps, it's Eternal, which is actually taking the lead with a solid 3% of a move. HDFC Life is looking very good. Sun Pharma, Cipla. There's Infosys, which is holding out well. HDFC Bank in the last few minutes have picked up, and I think that is what is rubbing off on the index because this has got to be the largest contributor. There you go, 977 is where the stock is. A pickup of about almost 1.5% right now in trade, and that seems to be rubbing off on the index as well. Axis, Tata Steel, HCL Technologies, they're also your other movers in trade as we speak right now. But Sunny, what is your sense on which way the IT pack is likely to head? Because there still seems a little uncertainty about the client spends in the US and, of course, the entire pressure with AI. Do you think one should give in into these sporadic moves within IT?
Yeah, definitely. I think still the concern on the client spend remain, and we all know that the September quarter is again likely to be a muted quarter if I take a short-term view, and maybe second half of FY26 will be relatively better than first half. But having said that, full year FY26 is likely to be a low single-digit kind of earning growth for the tier 1 IT companies. At least tier 2 IT companies, there we are seeing a relatively better growth, maybe low double-digit kind of growth in a tier 2 name. So a few names which are likely to do well on a relative basis are Tata Technology, Hexaware, Persistent, or for that matter, Coforge. So these are the 3-4 names which I feel can be a relative outperformer in terms of delivering numbers over the period of next 2-3 quarters. And in case somebody want to build a position in IT, I think a gradual accumulation is the right strategy rather than deploying entire capital at one go, as still there is an overhang on demand environment. And FY27 is a year where we will see a decent uptick in terms of earning growth on the low base of FY26. So need to have slightly longer horizon if somebody is planning to invest in IT.
All right, so that's the take coming in on select counters. But Kunal, the other pocket that is seeing a bit of a rebound is actually the life insurance counters, because just yesterday we had seen SBI Life, HDFC Life, they were the top drags, but they are the top gainers on the Nifty 50 today. What do you make of them on the charts?
Yeah, I think it's been erratic for many of the insurance companies. But today the move which you're seeing for HDFC Life and SBI Life, I think that's a very important potential reversal move for these stocks, because quite a few times we've seen that whenever these stocks go into a corrective mode, the next set of recovery which happens generally is more like a V-shaped start to the recovery. So for example, if these stocks rally up higher and then gradually they go into a corrective phase, for the correction to resume back, or the trend to resume back after that phase of correction, generally the prices go into a bullish engulfing kind of a zone or a V-shaped recovery into those. So I think today we are seeing those kind of signs emerging for the stock prices. Now, an ideal scenario over here is to try and place yesterday's low, more or less as a trading stop loss for traders who are looking to enter into these names, because if the trend persists over here for these stocks, then we may be looking at a swing upside of another 5% to 7% for many of these names. So an ideal strategy over here is to keep yesterday's trading low or swing low as a trading stop loss and look to look for more upside on the near term.
All right, so that's the take coming in on select life insurance counters. Let's watch out for that. But yes, the pharma pack is definitely doing very well. The top gainer on the Nifty 50 is, of course, Sun Pharma, but the broader end of the pharma pack, like Biocon, Laurus Lab, Aurobindo Pharma, Glenmark, they are holding up very smart in today's trading session. AB Capital is another counter which is holding on to gains of almost 2.5%. And Arpit, wanted to have your take specifically on AB Capital, because of late, this Aditya Birla group of companies, they are once again on the move. What specifically are you spotting when it comes to AB Capital? Very close to that 300 mark.
Yeah, so talking about AB Capital, it has been a standard performer within the entire NBFC space. So if you look at the chart structure on the monthly scale, a classical range breakout on the monthly scale after almost 8 years. And from last 2 to 3 months, it was consolidating, but the setup of the stock is very strong. So for the last almost 8 to 10 sessions, it's consolidating around between 280 to 300, 295 levels. Holding off is to 20-day mark. So definitely look at the setup on all the time frame. We can expect new life highs towards 300 in the short term and potentially 320, 330 plus. So overall stance will be positive. With keeping stop loss of 275, one can go long positionally for 300 to 320 plus up.
Kunal, as well as Sunny, great to have you guys on board with us. Thanks as always for joining in. I'm going to now hand it over to Snehi for the closing trades.